I'm going to prepare you for Monday's market open because a lot of things are changing in the market right now. We're specifically going to go over 3 stocks that you need to be looking at. One of them is HIMS. So for anyone who stood strong, had high conviction when HIMS came down this week, kudos to you. And for all the naysayers that said HIMS was going to zero, I want you to comment down below what price you think HIMS is going to now. But we're also going to dive into my portfolio results for the month. I want to show you, for transparency reasons, exactly how I'm doing. And we're even going to dive into some of how my clients are doing in options trading university. But let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, let's take a look. As you can see right here, the portfolio. I do want to go into the realized gain loss for transparency, and we're going to go just for this whole month, okay? So let's go ahead and go to that, 2025, and we're going to go to June and June 1st, all right? So we haven't quite finished out the month yet, but, we are up this amount, and, I'm okay with that. It's a little over a 2% return for the month on my portfolio. Obviously not what I was looking for, but I'll take it. And, we managed to get through that HIMS dip. As you could see, because I rolled those puts down, I did take this amount of loss, but collected enough premium in August to potentially cover that whole loss. So it's not that bad. So overall, we came out with a net profit, which I'm happy about. So let's go ahead and jump into the CME FedWatch tool. This is something that has changed. We see that a federal interest rate cut is coming in September. 89% odds are that it's coming in September, okay? And then something that we did see change was a 6th rate cut being priced in for December of 2026. So this is something that's brand new. So that would mean that potentially we will be getting 6 rate cuts, which is good for the markets. That's what causes the markets to go up, right? More liquidity, businesses can borrow at cheaper rates, refinance their current debt. Consumers can borrow at cheaper rates to spend more money in the economy, which drives up the stock market. And that's what we want to be seeing, okay? So potentially that's why the market has absolutely ripped. And as you could see, brand new, fresh all-time highs here on QQQ, okay? Now, these are the times where everyone starts getting excited and they start getting the fear of missing out, the FOMO, right? And people start chasing higher prices. So this is when I like to be more careful, a little bit more cognizant of how much cash I have in the portfolio for any potential pullback or any opportunities that may come with a spike in fear, okay? So as you can see, all right, we are currently, trading at all-time highs. We are just breached over that overbought area on the RSI, but we could stay there for longer. If you look at the past, okay, I like to look at the past to just kind of get, an idea of how long these potential runs, these bull runs can happen. If you look back here, leading up to the crash, you saw that this channel right here got very overextended, okay? This channel is looking, very seamless, kind of steady melting upwards, but it could get extended, right? It could get extended. And like I said, we potentially could go up to that 560 area, depending on good news and just how investors take it. But, it wouldn't surprise me if we ended up there, considering that we hit 550 today on QQQ. So, these things could stay overextended for a few months at a time. And that's kind of where we're at, right? It's been, let's just say, 1.5 months now. We could stay extended potentially for up to 3 months, but we'll be careful, obviously, as the VIX is decently elevated, but it is approaching that 15 level. When we get to the 15 level on the fear and volatility index of the S&P 500, I change my cash allocation levels. So let's go ahead and take a look at that. So as you can see, the VIX levels for 2025, 2026, this is something that I personally follow just to keep myself in line and so that I always have cash readily available when fear does elevate, okay? So we're currently sitting at VIX 15 to 20. So, 60 to 80% of my cash is allocated, and then I could be technically 20 to 40% cash allocated. But my current portfolio has about 15%. Okay, so I'm a little bit more aggressive than this, and I'm okay with the consequences because I think that personally the market is going much higher from here. We just are recovering from the 5th fastest stock market crash. Okay, so just keep that in mind. For yourself, where are you at as far as your portfolio, and where do you need to kind of manage that risk? Okay, according to VIX, because yes. The VIX, could head lower, and it probably will, and the QQQ could head higher, and most potentially it will. But I will be shoring up cash to take advantage. Now, let's go over some client results. I want to show you a sneak peek into my community. As you can see right here, my community is very engaged. We do have a channel here where people share their inspiration, right? How they did for the day, right? And you can see that many clients are sharing their wins, which is absolutely amazing, and we love seeing this. So if you do want to participate and you do want to take advantage of one of my channels in here called Ryan's Trades, here's a sneak peek, right? These are just my trades for the day. These are all the trades that I put on live, and I put them into the community. But if you do want access to that, make sure to check out the top of the description down below this video. It's going to take you to this page where I show you exactly how I'm trading options, and you could even watch some of our client testimonials and potentially book a call if you'd like to speak with me or one of my team members. So let's go ahead and jump into the first stock, HIMS. Okay, we got to talk about HIMS because HIMS had a lot of negative press around it this week. Okay, the stock fell 34%, and a lot of people were very, very worried. Now, for me, I said, you know what, not a big deal. I like the stock long term. I want to own it at cheaper prices. So I rolled my 54 strike puts down to the 45 strike and the 48 strike. Okay, so I'm fine getting assigned the shares at that level. Now, I might not get assigned because HIMS has absolutely taken off because, when all the bad press is coming in, the company fundamentally is doing better. As you could see, they hired Dirja Kouar, okay, their chief product officer, who is also the VP of product at Robinhood for 5+ years, led Robinhood Gold with now 3 million plus subscribers, okay, and previously was a CPO at the Skim for nearly 5 years, okay? So she has a lot of experience, and it seems like HIMS is just really racking up their C-suite and hiring very, very talented executives for their company. So this was a major catalyst, and this catalyst had an effect on the stock. As you could see, we really dove down here quite a bit, okay? We went from basically $64 all the way down to, at the lows, of 40, okay, which is a 36% drop. But you saw that we quickly turned around, okay? We quickly turned around, and today we hit a high of 52, which from the bottom is a 27% increase. So, there comes a point on good stocks, okay? And I only invest in stocks with great fundamentals, great growth, PE ratio below, it has to be below 100, okay? And this stock is a high growth stock, so a PE ratio of 70. Yes, it's a little high, but for a growth stock, it's not that high, considering Palantir has a PE ratio of like 600, right? So when you see companies like this with strong fundamentals, great double-digit, even triple-digit growth, and they tank, right? There comes a point where the stock becomes too cheap and investors start stepping in and saying, hey, this stock is undervalued. We're going to step in here. And that's kind of what we saw here, okay? So, I don't really know where it's going to go as far as how high it's going to go in the short term, but I know that by August 15th, where my puts are at, this thing, probably will not be in the mid 40s, right? I probably won't get assigned, but it'll probably have a nice steady up curve here and then maybe pick back up, okay? So we'll just kind of wait for that to happen. Just be patient, acquire shares at good prices here. That's what I'll do. And, just be patient with it. But HIMS definitely on a rebound now. And I think people are getting a little FOMO. As you can see, the volume bar of buyers today was absolutely great. Same with yesterday, okay? And this thing was nearly oversold, was looking super bearish on the MACD, but is now picking up some good momentum on the RSI and starting to flatten out on that MACD curve, okay? So we could see this thing head higher in the next 2 weeks. So with good news coming in, right, let's take a look at the portfolio. Remember, this is not financial advice. I'm just sharing this for educational purposes. Results may vary, but let's take a look at the portfolio, okay? As you can see, this is the HIMS position. I was down 24K, rolled all my puts down, collected 25.8. So that will make up for it with a little profit on the end if I wait until expiration on these. So, manage that position very well. And if I get assigned at these prices, great, got a stock at a discount, and I like that. But as you can see, we've already recovered quite a bit there. So, HIMS right now, if I were to, have some extra cash to say, hey, I want to sell some cash secured puts, I'd probably go out to August 1st or August 15th to take advantage of earnings, right? But most of the time I'm sticking to 30 to 35 days out. So we'll just go to August 1st. Right now, I'd probably go for the 20 to 25 delta puts, so the 40 to 42s. But if I wanted to be safe, I would go to the 40s just to meet my return goals. And this is exactly how I calculate it. So to calculate how I calculate the return for myself on a particular put, obviously this price is not guaranteed because the market's closed. These prices will change. But if I have sold, the 40 put today, okay, 200. I would take that, the premium, and then divide it by the strike price, okay? And that's gonna give me the return in the designated amount of time. So that's it, that's a decent return there. That would meet my return profile by a lot, okay? So I like that one, and that's what I would select on HIMS at this moment. And that would get me all the way down to here, okay? So the stock would have to fall about 19% from here for me to get assigned on 100 shares at expiration on HIMS, okay? So HIMS looking very good, all right? HIMS meets my criteria as far as great chart, great fundamentals, and great premium. So let's move on to the next stock that I'm very, very excited about. Anthony Noto, CEO of SoFi, okay? He said, very excited about the innovation we can drive via blockchain and crypto across our businesses. SoFi's planned new international payments will convert fiat to crypto, transmit via blockchain, and convert to local fiat. This is absolutely amazing. We want to see companies like this just innovating and offering the newest and greatest features for their clients and customers, okay? So very awesome to hear that from the CEO on Twitter. And you could see that it's performed. It's definitely been a catalyst for the stock hitting brand new, yearly highs for the day. Or actually not, was it yearly? No, not yearly highs, monthly highs, okay? We hit 1718 today, okay? So what am I doing here? Now, what I like to analyze on this stock is I have the PE ratio chart pulled up on my trading view because I like to see, okay, where was the stock trading? Back here, it was trading around similar prices, right? But where was the PE ratio, right? What were investors willing to pay for this company? Because I feel like the company now has even more innovation ahead of it. But back then, right, the stock was trading at 17 and overbought on the RSI. And the PE ratio was 139. So investors were willing to pay 139 times what they actually earned. Back here, I was not an investor in SoFi because it just didn't make sense. It was too expensive, right? I wasn't willing to pay that much for the stock compared to the earnings. But they did have amazing earnings coming in December, which dropped the PE ratio down to 38, okay? And that's when investors got really excited. Now, we're trading up here at these same prices, okay? But the PE ratio is at 40. So it's literally trading 4 times less or 3 times less of a PE ratio. So you're paying 3 times less for the stock at the same price. So I think, in my opinion, this stock is still very, very undervalued. So I did a lot of different stuff today on this position. I know we're overbought on the RSI, but again, back here we stayed overbought from October all the way to the end of December, so like 3-4 months. And as you can see, the volume bars are going up, green volume just increasing. That's typically what you want to see on a stock that has bullish momentum, okay? But this is what I did to adjust my position. We're going to go into the account. As you could see, my current position here, 139K of collateral there. So I'm willing to get assigned on that much of shares. Okay. I know the risk entailed. So it is a pretty big position in the portfolio, about 13 and a half, 14%. Okay. So as you can see, the SoFi, I rolled all my puts up from 14 and a half up to 15 and a half for the August 1st expiration to collect this amount. All right. So I like that strike. If I were to do it again on Monday, again, these prices will change, but I would go for the August 1st. And the reason I went for August 1st specifically is because that's when earnings are. So I'm taking advantage of volatility, high implied volatility, as you can see, 70%. I'm taking advantage of that because long-term I believe in the stock and I'm fine owning it at 15 and a half if I get assigned, okay? So I'm gonna do the calculation there. So this is how I do the calculation to calculate how much premium I'm collecting for that specific strike. I'll take the premium, so 65, and I'll divide that by 15.5, the strike price, and that will get me, show me the monthly return for myself. And as you can see, this is that return. That means my return profile, so that's okay, right? I like that. So I'll take that strike every day. Yep, and that's basically what we did in SoFi. Very, very happy with the stock. And I do believe it will go breach past previous all-time highs here at 1842. Okay, so that is where I believe it's heading. Obviously, it could go down from here, could stay sideways, could go up past that, but long-term, I'm bullish and I like SoFi, so great company. Now let's talk about the last company right on the close, okay? Right on the close, Palantir dropped significantly, okay? Someone posted on Twitter, is said Palantir, no way, LOL, stock falls 9%, because Jim Cramer said that Palantir is a $200 stock, okay? So the funny thing is, like when Jim Cramer says the stock's going up, it goes down, right? There's an ETF, inverse Jim Cramer ETF out there. So like funny that the stock actually went down pretty significantly after he said, oh, this is a $200 stock, but this provides good opportunity, right? We've came all the way down to this trend line right here, which I didn't think that was going to happen. So on Monday, I'm looking at the LEAPS, okay? I'm looking at the LEAPS on this to get in pretty aggressive for a nice bounce here, because long-term, Palantir, great company. Yes, PE is high, but they have a lot of cash on hand. So I like the company, okay, long term. So as you can see, let's see how far this thing actually dropped. I'm curious from the highs. Yeah, from the highs, we're currently down 12%. So that's a nice little correction there. Not bad. And it hit this trend line and it's below the middle line of the Bollinger Bands, getting close to that lower Bollinger Band line. So, this is how I'm approaching it. I already have cash secured puts at the 125 strike. So I'm just going to leave those as is because I'm fine getting a sign there, but I'm probably not, but we'll see obviously. But I'm going to go to Palantir. Okay. And I'm going to go out probably Jan 15, 2027, just give myself ample amount of time to be right. And I'll probably pick up those 125 LEAPS call options for $4,700. So I'll have to pay this amount, right? But to control 100 shares, if I wanted 100 shares today, that would be, 13 grand. So I rather, grab some of these, ride them up, and, have a nice time on Palantir. But we'll see. We're going to see on Monday. That's the current play for me and the group on Monday. So I wanted to shout that out there for you as a nice free little play here. But if you enjoyed this video, please give it a thumbs up. That really helps boost it in the algorithm. I appreciate you being here. Make sure you're subscribed, and I'll see you in the next one. Take care.